Let's hear some more from our special guest host today, hedge fund manager Jim Chanos. Jim, we've been talking about how the short selling ban expired at midnight, and that could lead to some big changes because for a long time, or for how long's the ban been on at this point?
17? 4 weeks?
Extended it.
It's been extended a couple of times, but in any event, over the last month, we have watched people have to change their strategies. What happens now?
Well, I mean, we did see that. We saw a lot of people caught out who were short financials or couldn't implement strategies really get hit hard in my industry, the hedge fund industry, in September. Not that I think a lot of people are shedding crocodile tears for the hedge fund industry right now, but be that as it may, it was the law of unintended consequences. I don't know. I mean, as I said earlier, one of the more interesting things might be if credit spreads actually narrow because people can use what might be still overpriced equities to hedge versus doing it in the credit default market. We may see that market actually come in a little bit. I don't know. I mean, there were unintended consequences when the ban came in, so I'm probably the last person to talk about what might happen now that people can short financial stocks. And as I said, in our portfolio, we were probably as least short financials as we've been in years and years and years.
You just said overpriced equities. Like what? What's still overpriced?
There's an irony that I just heard from your last speaker and earlier with Mr. Dahl, and that is, it's very interesting that people who are bullish or turning bullish then say, well, I want you to be in safe equities. I want you to be in ones with free cash flow and good, strong balance sheets. Well, those aren't the stocks that actually are going to lead the market if it bottoms. In fact, they're going to lag. As I recall, most bottoms that always rip my throat out, it's the stuff that's gone down the most that leads the way back up. And so you're going to really need to see people make a stand there in the financials or some of the areas. Again, where we're looking we're looking abroad. We're looking to people who, as sort of the first derivative of the credit boom, we're getting easy financing to build plant equipment and projects and that make no sense. So
this is still the infrastructure boom.
Yeah, I think that's. I still think cement companies, steel companies, construction companies, contractors, overhead crane companies, that sort of thing are for us the place to be.
Emerging markets are very popular as they're beaten down as a place to come back.
Yeah.
Is there an emerging market equity bubble that we have? Is that the place to be, or will the U.S.?
Well, in hindsight, there clearly was. But, I mean, again, the markets themselves have gone down. Now, Russia's down almost 70%, I believe.
Time to go back in there?
I don't play. I certainly didn't play on the long side, and trusting for my personal safety, I don't think I'd play it from the short side either. So we'll leave Russia to somebody else.
But can't now anyway. They're closed, right?
Yeah,
yes,
true. That's
true.
Even better than banning short sales. Just I wanted to close the market yesterday morning when the futures were up about 250. Why, that would have been perfect.
We're done.
We'd be talking today. We're up 250 yesterday, but it didn't happen that way. We have some viewers, and I remember Macquarie, and I don't know, the bank was mad at you, mad at us, mad at everybody. Where was the stock then? Where is it now?
Oh, I think when we talked about it on Squawk, it was a little bit higher.
Where is it now?
It's in the 30s in Australia.
Where was it then? The 70?
60, 70.
60 or 70. Yeah. All right, so far, Chanos is winning on that one. You still short?
We are still short. That's a bank with a business model that was built on basically buying up these state and local infrastructure assets, meaning airports, toll roads,